Hello and welcome to another update video about ADA. ADA has reacted nicely to the 61.8 retracement level, exactly at the point of, it's not an invalidation point because in a diagonal pattern that we were tracking in the yellow scenario, we talked about this pullback and we said it's probably a wave 4. And when we know that a wave 4 shouldn't really go below the 61.8 retracement in a diagonal, okay? But it can. It's not an invalidation point. It's just support. So either way, what are we tracking here? Let's talk about short-term bullish and short-term bearish scenarios. Yellow is the short-term bullish one in which, the base case is a larger degree fourth wave, a larger degree correction completed on the 3rd of February. And this was a wave 1 to the upside, then a wave 2 to the downside, and now we are probably actually in the late stages of wave 4, or maybe we've already started wave 5, because wave 3 topped on Sunday, sharp pullback, okay, and this could now be the 5th wave. So we have 5 waves up in a diagonal pattern, however. So it's a structure that warns us that the move up will be a bumpy road, okay. So people tell me the market is completely crazy, manipulation, whatever. It's just highly volatile. And there are currently some news events that can lead to exactly what we see in the chart, high volatility. However, I would argue that this stuff wouldn't necessarily be the case if we were in a larger impulse structure. And we're not. We're in a large diagonal structure, which is a fragile structure that warns us that unexpected pullbacks happen all the time. That's precisely what we see. So it's not a surprise that the market is moving as it does at the moment. The thing is, though, there are 2 wave counts, short-term bullish and short-term bearish. Short-term bullish we just talked about. We might have started wave 5. To be fair, we should really have, because if this is the yellow count, then any break below the Tuesday low that formed at 75.5 cents would be too deep for the yellow count. So if the yellow count is to survive, then we should have bottomed already. But obviously the market will decide that. So what are the conditions for the yellow scenario? Well, we need to see the price rally a little higher, ideally. We're now in a resistance area. Micro resistance is between 94.3 cents and $1.06. The price should go a bit higher, form a higher low in what would be yellow wave B, and then another C wave up, and we have 5 waves up. But the price must break above $1.17, which is this previous swing high. And then we should be able to target $1.42 to $1.72. In the white count, we're dealing with a different structure. It's a large ABC structure, A, B, C. In wave A, this here could be a B wave, and we might get rejected in resistance and then go up from there. What that means in simple is, pay attention to the resistance area. It is between 94.3 cents and $1.06. Any rejection there could strongly indicate that the C wave down is unfolding. Then the focus will shift on this support area between 56.1 cents and 70 cents. And if the price can find support there, we could get another rally. So there are 2 bullish scenarios at the moment with 2 support regions. However, for the yellow count to stay alive, we should really hold the Tuesday low. And if we don't, then there is still a chance for an upside reversal as long as we're holding this lower support area. Below that, the bullish scenario will be really, really challenged. And as I mentioned in my video that I made earlier today about ADA, we had arrived at a key spot. The price made a decision, and now we need to see if the market can break above resistance and rally above $1.16, $1.17 to finally break out of this range. But overall, situation hasn't changed. The white and the yellow counts are both still valid. That's the update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.